hotel. And also the main purpose of this Waqf was a library, and the library will be developed into a very world-class library with a lot of modern facilities and exhibition facilities. So this is an example of how Islamic financial sector can come in and develop Waqaf properties. I know that in Bahrain there are discussions of creating an Waqaf investment bank with $500 million capital. It was going on fine until the crisis, so they are having problems to raise funds, but this is an example how the Islamic financial sector is coming in to fund and finance Waqaf institutions. The other way in which the Islamic financial sector can support Waqaf institutions through financing is to get funds through sukuk issues. And of course, the Zamzam Tower example in Makkah using sukuk al-intifa is a very well-known case. In this case, again, the Waqf land, which is in a very prime area just in front of Masjid al-Haram in Makkah, was leased to Bin Laden Group for 28 years on, again, BOT, build, operate and transfer, to build a complex, huge complex of 4 towers and a mall and a hotel. Bin Laden Group in turn leased the project to Munshat Real Estate Projects of Kuwait for 28 years. Munshat raised $390 million funds issuing sukuk al-intifa, time-sharing bond, for 24 years by selling usufruct rights on this project. So basically for 24 years the holders of the sukuk will have right to use these properties for a specific time of the year. So if the time is during Ramadan, they had to pay much higher price for a square foot rental, but if it is on other seasons, they have paid. So they had structured a very interesting kind of timeshare bond where bondholders paid different amounts depending on what time of the year they are going to rent the property. The other case is case of Singapore, where MUIS, which is the Muslim Religious Council in Singapore. We have a student here from MUIS, and actually she was the one in some ways who helped structure this bond Musharaka Sukuk. There is $60 million dollars, I don't know, Singapore dollars to develop two projects. The Waqf, there are Waqf properties in Singapore. The Waqf provided the land. The investors who are the sukuk holders provided the funds for investment. And Waris is a company which is again I think owned by the MUIS. They managed the project. And these were very successful projects. In one case, I mean, of course, they are in the paper. You will see how these sukuk was structured and what were the returns. But in one case, a very old mosque was renovated to a new mosque, and it was provided with attached commercial property, and is earning 200,000 Singapore dollars annually. Before it did not earn anything, and it was a very old kind of dilapidated mosque. Okay, now we move to the other service which the financial sector can provide. As I mentioned, one of the problems with Waqf properties is management. And actually, one of the reasons why the governments have come in to manage Waqf properties is because of poor management of Waqf institutions by mutawallis. And in a lot of cases, mutawallis misused or used the property for their private gains. And to resolve this, the government came in and taken over the management of Waqf institutions. But government coming in and managing is not a solution. What happens is actually it in some ways creates more problems. So what is the way out? the government, their officials and bureaucrats, they don't know how to manage these institutions, and of course in some countries there are also corruption, and government officials are making money out of these properties. And private individual mutawallis, the traditional way of organizing Waqf is also not feasible. So one alternative is actually to have corporate trust management organizations. These organizations exist in conventional finance. They provide trust management services. Trust and Waqf are very similar concepts. And of course, by managing these trusts, the financial institution gets fees and compensation. Now, why use corporate entities? There are some benefits to it. First is that you have permanence. If you have a mutawalli, the person falls sick or he dies, then you have to think of some to replace him, and then there are problems with succession, who becomes mutawalli. This does not happen in a corporation. Corporation is more or less can continue for a long time, so you can ensure permanence, continuity. In case, especially, they can go on taking care of the Waqf property as long as the property exists. The other is expertise. Corporations usually have professional people who can manage assets more professionally. Mutawalli usually is a family member who may not have the expertise to manage properties, and probably that's one of the reasons that most Waqf institutions have not been developed, because people who are managing the Waqf properties do not have the vision or expertise to develop these properties. And the third reason why corporate entities should be can manage these institutions is that they will manage the Waqf asset without any bias. There will be objectivity. If it's a mutawalli, he may favor one or two beneficiaries compared to others, being human. But when we're looking at a corporation, they look at the Waqf deed and try to govern the Waqf asset accordingly. So there are good reasons why corporate entities can come and manage. It will improve the management and governance in Waqf institutions. Now, if we again look at the conventional, there are two types of Waqf management, or actually trust management organizations. And interestingly, we have some Islamic variants of these trust management organizations. The two major types are the banks and a lot of large banks and financial institutions. They have these trust management departments, or sometimes they even have subsidiaries which look at managing trusts. Now, recently, actually in 2007, Dubai Islamic Bank established Waqf Trust Services Limited in Dubai, along with DIFC. So this is the first Waqf Trust management service in the Islamic financial sector, and this is a very healthy development. But this is probably the first and the only one which exists now. There's a need for developing trust management, Waqf management organizations in Muslim societies to manage the Waqf properties efficiently. The other type is through having independent trustee companies, and the example I have here is Amana Raya Malaysia. Actually, it was a trust management. It used to manage conventional trusts before, but now they have also included what they call Islamic trust. Now they call it Islamic trust because in Malaysia, if you want to create a Waqf, the government, the state actually will take over the Waqf management. So if you are an individual who wants to dedicate some of your money or assets for some social goals, under the Malaysian laws, you have to create a trust so that you can retain the control of this asset. So not control, but so you can retain in some ways the governance of this asset. So Amana Raya Malaysia has now also introduced Islamic trust services, and so if you want to create an Islamic trust, which quote unquote can be called a Waqf, they can manage it for you professionally. Now, among the services which Waqf management organization can provide, I've listed it on slide 23. Of course, it can provide the services of a mutawalli, a manager of the asset. It can also have custodial services. It can keep, for example, the documents and other relevant papers regarding the Waqf with it. It can have also estate management services. It can help in investment management services, and also it can provide advisory services. Now, I'm not going to go over all these 5 services which can be provided by a Waqf management organization. What I'll do is just go on number 1 and number 5 to look at some specific things which a Waqf management organization can do to serve the Waqf sector. Now, services of a mutawalli which this organization can provide is to review and implement Waqf terms, to develop and implement investment strategies for Waqf assets. So here they'll not only be managing the Waqf property, but also think of how to develop it so that the income in the future is enhanced. They'll collect, distribute and reinvest income from Waqf assets. This organization will also maintain all accounting records and provide regular information to the beneficiaries and fulfill the financial obligations related to assets, for example, paying taxes, bills, electricity bills, etc., and also seek legal counsel when needed. So basically, this corporate entity will be responsible for this asset and manage it according to the Waqf deed. The other services which this entity can provide is, of course, will writing, and we know that in Islamic inheritance law, 1/3 of the asset can be dedicated as Waqf. So they can advise on that, and actually they can also help in inheritance issues. They can advise on Waqf trust accounts and funds, how to form Waqf, provide the legal information, and provide the help to go to courts and get a Waqf deed, for example, registered, and also provide investment advice related to Waqf. So that takes care of the demand side, how the Waqf industry can get input from the financial sector. Now we'll look at the supply side, how Waqf can provide some financial services in the Islamic financial industry. As we mentioned earlier, that one of the things which Islamic financial sector was expected to fulfill was the social role, but we see that this is not being performed. And increasingly, with the more in some ways commercialization of Islamic finance, this role is apparently getting, it seems, less and less. So what I mentioned is Islamic firms is not only about fulfilling Islamic contracts, but it is more than that. It is about social justice and benevolence, and apparently this aspect is missing in Islamic finance. Now, to bring in some of these socio-economic aspects, we can bring in the institution of Waqf and create institutions which can provide the social, or can fulfill the socio-economic objectives. And what I have here are three examples of how it can be done. One is to have microfinance based on Waqf, which provides financing to the poor and disadvantaged. The second example is of a takaful. We had a whole lecture last week on takaful, so I'll not go too much into details on takaful, but just show you the model which was shown actually last week, and also argue that we can have Waqf-based guarantees kafalas. Now, Waqf-based microfinance institutions, I think we have distributed a paper which goes into details, so we're not going to go into details of how this Waqf-based microfinance institution operates. But the interesting thing is actually historically Waqf-based institutions did provide loans to the disadvantaged. In Turkey there were cash waqfs which were giving loans to the people in the community, and in Iran there are Qard Hasan funds which still exist, and this Qard Hasan funds actually a lot of them are based on waqf. So it's not that we are reinventing the wheel, but what is needed is to have a new organizational structure through which this microfinancing can be delivered. And in the paper which was distributed, I argue that the model which can be used is the Grameen Bank model, where microfinancing can be provided by this group-based microfinancing, the group-based format used by Grameen Bank, because it takes care of the credit risk. So when we are looking at financing, we have to actually see that this Waqf-based microfinance institution is sustainable, it is efficient, so we have to take care of all the risks which arise in financing. So the Grameen Bank model, group-based financing, appears to have taken care of the credit risk, and the same format can be used for Waqf-based microfinance institutions. Now, the question is, how do we bring in Waqf in microfinancing? There can be three ways in which it can be done. One is to use the corpus of Waqf for some investment, and because you have to remember that the corpus of the Waqf has to be intact. We cannot use you cannot allow a decay in the corpus of the Waqf. So the safest way would be to invest the Waqf, and here of course we're talking about cash Waqf, in some assets which gives you some returns, and use the returns for social purposes including microfinancing. So your Waqf asset is protected and you're using the returns. But the problem with this approach is that you will have very few, the scale of operation will be very, very small. So if you have, for example, $1 million worth of Waqf, and the rate of return is only 3 or 4%, so you'll only be using $300,000 or reals for microfinancing, and this may be a constraint in terms of reaching the number of people. The other way is to invest in corpus of Waqf and financing interest-free loans. And actually, if you look at Turkey case especially, this is how it was done. They used to use the corpus of Waqf itself for microfinancing. But the only problem here is that there are risks involved which you have to kind of take care of. The third model which is suggested in the paper is that the corpus of Waqf is used as capital to create microfinance institutions. And when that is done, actually you can enlarge the scale of operations of Islamic finance, Islamic microfinance. So some of the features of Waqf-based microfinancing will be, I'm looking at the third case where the cash Waqf is used as capital of the microfinance institution. Then it collects saving deposits from, among others, the beneficiaries as mudaraba contracts. So these saving deposits, they share in any profit which arises. And then we have additional funds from Waqf and other sources, and the additional funds can come in form of Waqf certificates, even Qard Hasan deposits, which basically will be demand deposits. So when we look at the capital and liability side of a Waqf, we'll have Waqf as capital, and the other things are very similar to any other Islamic financial institution. We'll have saving deposits, which are profit sharing, and we'll have Qard Hasan deposits, which are demand deposits. But because this will be a social institution, the institution can also issue Waqf certificates where people who want to contribute to this effort of socio-economic development can buy these certificates and dedicate their money for this purpose. On the asset side, again, there's a long discussion in the paper. The main thing is that, of course, the composition of assets has to be, again, we have to consider the fact that the corpus of the Waqf has to be intact. So one way to do that is to invest a part of the funds of the microfinance institution in assets which earns fixed income. So this fixed income assets will provide a cushion against unexpected losses. So we have a fixed income which is coming from, of course, Islamic assets, and this will cushion any losses which may occur in financing. And financing can be taken either as qard, then this qard, of course, will be Qard Hasan. This will be only the service charges can be charged. Then we can have sale-based or hiring modes, just like an Islamic bank. We can have Murabaha, Salam, Ijara type of modes, and then profit sharing modes, Musharak and Mudaraba. Now, the difference between Waqf-based microfinance institution and any other Islamic financial institution is that we have to keep the capital of Waqf intact, and the Waqf-based microfinance institution has to take some additional steps to keep or to preserve this capital. So a Waqf-based microfinance institution will be more risk averse. It will take a lot of other steps to minimize the risks which can affect the capital of Waqf. And it can, of course, do this by looking at how it will allocate its assets in long term and short term, and also what will be the risk profile of assets, whether to go for riskier assets or so there is the asset allocation strategy has to be such that the risks are minimized. And then we have to create reserves, some special reserves to absorb the negative shocks. And the reserves which are mentioned in the slides are, this is slide number 32. We should have some takaful reserves which are contributed by the beneficiaries, the people who have taken loans or financing from the microfinance institution, and this will be used in case of default for unexpected reasons. So we have a reserve which can cover for defaults, and here we are talking about unexpected reasons. For example, there's a natural calamity or some accident which happens, and a Waqf-based microfinance institution should not ask for return of loan in such situations and cover the debt from this takaful reserves. The other reserve which relates to the depositors is profit equalizing reserves, and this will be contributed by the depositors and used to maintain competitive returns. This is something which is used by Islamic banks and can also be used by Waqf-based microfinance institutions. And the third capital will be contributed by the surplus of the microfinance institution. Because it's a Waqf-based microfinance institution, whatever surplus or profit this institution makes, it will be not distributed to shareholders. So all the surplus can be added to enhance the capital reserves and can be used by the institution in case of negative shock. Now we go to the other part, which is takaful. Again, as I mentioned, the whole lecture was delivered last week on takaful, and we saw that there are three main types of takaful model: Mudaraba, Wakala, and Waqf. And the speaker last week mentioned that the Waqf-based model appears to have less controversies and more benefits. And we can use actually the Waqf-based takaful model for takaful itself, insurance, then re-takaful, and also for micro-takaful. And the model, which is on page 34, is basically the model which was shown last week.